Over to you. You're in.
Let's give people a little bit of time. And I think we will remove any note takers for now because we are going to send the chat window. I'll go ahead and let Anupriya do that. Hey, 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 hey. Good morning, good afternoon, wherever you guys are. Very, very excited to have Adam here with us. Adam is not only very knowledgeable, but I'll take the risk of saying very entertaining. So we
Oh,
want to keep this fairly informal. And what I would encourage you to do is, this is really more of a fireside chat. So don't expect a presentation. I think both of us
mm,
have a wide range of background, and I think we can bring a lot of perspectives on today's capital raising challenges. What I would like you to do is we'll have plenty of time for questions and an open discussion. So if you don't mind, please start typing in any questions you have in the Q&A chat window, and then we can try to address those questions as we go along. Yeah. I think many of you probably may recognize some of each other from prior meetings. So the intent of this, let me kick this off, and then I'll let Adam pitch in here too. The intent is to cover some current topics. What are some challenges in capital raising? How do what mechanism really works well with investors? What are some platforms you can use? I mean, uh, just to be very candid with you, this is a Avestor sponsored webinar. And I think many of you probably have heard of a customizable fund. We have a platform where we plan to revolutionize how capital is raised, and we have a product called a customizable fund, which allows you investors to pick and choose which deal they want and how much they want to invest. I'll talk a little bit about that, but certainly this is not a marketing webinar, but I want to talk about the advantages of a customizable fund or other platforms. And Adam is an expert on LinkedIn, and I think he's been using LinkedIn very, very effectively. You get so many cold emails, so would love to get his feedback too. So let me quickly introduce myself. My name is Badri Malynur. I'm a co-founder of Avestor. Before Avestor, I've been involved in multiple startups. I really invest in a wide range of asset classes. Crypto, I've invested in about 25, 30 startups. A few startups went belly up, but that's the nature of investing in startups. I used to run a venture fund, a hedge fund, which involved index trading options before this. Was an exec in a Fortune 500 company, have a double E bachelor's degree, a master's in computer science, and an MBA. I guess a jack of all arts and master of none. And I'm really, really excited at what Avestor has done to the capital raising industry, and would love to talk a little more about it. Love traveling. Adam and I were exchanging notes about Japan. I'm planning to go to Japan next month, and I've been to. My goal is to visit every country in the world. I've been to about 70 countries. Quite a lot to go. I don't think I can do every country because, well, it's I don't know. Some countries I don't want to visit. Probably not too safe. So with that, a little long introduction to myself. Let me go ahead and introduce Adam, or ask Adam to introduce himself. Many of you already know
sure.
him, but I'll let Adam speak about himself. So.
Yeah, see some small friends here. It's nice. It's nice to see people who I already know. Welcome, everybody. So actually, all your travels, I was going to say, so are you going to go to Lesotho, or have you never heard of
It's
that
not
one?
on the list, Adam, but we will talk after the webinar.
Now it's one of the most famous countries in the world, inadvertently, right? Immediately, like, what can you say? All right, so my background obviously also somewhat international. I grew up in England. I did at university. I went to the London School of Economics, and I studied political and crowd psychology, or political crowd and media psychology. So LSE was London School of Economics and Political Science. My interest was the psychological aspects. So this was, hundreds of years ago, before even the phone was invented, that I went to university. But what I learned there is very, very relevant for the online world. Uh, I've been in commercial real estate since the early 1980s, when interest rates I remember the first mortgage that we got on a ground up development deal, multifamily shop, was, I want to say 18%. Can you imagine that? And I remember getting 10%, 10 to 12% interest on the deposits that I had in the bank. It was incredible. So it was a very different world. So these days with higher interest rates, what, 6, 7%. This is actually normal. It's what I was used to seeing when I became an adult. Actually, seems quite low in comparison to that. What I do these days, though, and I've spent, I did ground up finance, ground up multifamily in the 80s, in Southern California in the 90s. I was in Japan running a division of Universal Studios. Actually, it was a JV of Universal Studios and Paramount, building all of their real estate across Asia Pacific. So I was president of that division. That was an interesting institutional experience. Then I came back and built all my own deals or did my own development. And in 2007, sold out. It was a lucky break right before the global financial crisis. Ended up at East West Bank. They hired me through the board to help them clean their balance sheet of non-performing loans, real estate collateralized non-performing. And so I dealt with $1 billion of those, and then moved over kind of to Colony Capital and worked on a $7 billion portfolio in partnership. Nobody really realizes this, but we were in partnership with the FDIC. It's a long story. People think that the FDIC sold loans. They didn't. They actually did JVs. So we partnered with the FDIC on these. And so I've seen every possible way that real estate can go wrong across every asset class. Today, what I do is work with sponsors and allocators to help them optimize their capital formation. In other words, to raise more money faster by either building systems for our clients typically, or providing training to those who want to do it themselves. Our clients manage over 35 billion of AUM and have raised almost $1 billion. That is my bio. And I have a PhD as well, by the way, in risk management.
Spare time, right, Adam?
Huh?
You got the PhD in your spare time.
In my spare time, I did. Yes, it took 10 years to get it, but I got it eventually. Yeah, it was very interesting actually. It's about the how banks underwrote risk during wartime, basically.
I see.
Yeah, and it was during an era of crowdfunding and capital formation. But go ahead, I talk too much, so you got to cut me off.
Oh no, that was a very, very interesting, and that's why I always love talking to you. It's very entertaining, and knowledge. You get a lot of insight from on multiple aspects talking to you. So why don't we kick this off by maybe I'll ask you a question, and feel free to jump back in, and just to remind people who have come in. We are going to keep this fairly open. There is no presentation as such. So feel free to type in questions which you have so that we'll get to it. So what do you think are some of the top challenges in the capital raising environment today? And it's a 2 or 3 part question. We live in very interesting times. And, I don't want to bring up politics, but it's almost impossible not to. With the tariffs around the corner, global uncertainty. What do you think are the top challenges, Adam? I mean, you get exposure from a wide range of sources. So,
it's funny actually that you asked that, because my mind first went to the impact of bridge loans and excessive debt, the impact that has had on investor attitudes to commercial real estate investing. So we're talking about accredited investors, passive investors. That was my first instinct, was to go to that's been a major impact, because it has. You've got this new world of capital formation that started really in 2012 with the Jobs Act that allowed for general solicitation, which meant that you could advertise, here, invest in my deal. Right? It was the first time that was allowed in commercial real estate. And so that created three things: sponsors who went out to raise capital online that they'd never done before, investors who had never had access to the kinds of deals that we see today. They'd never had access to those. So there's another audience or population. And then you have the platforms like CrowdStreet and Realty Mogul and originally Realty Shares and others. So this created basically a new industry. And because it started at the tail end of a downturn, 2012, its trajectory was up, only up. So for the first 7, 8 years, all anybody knew when they went into commercial real estate was wins, right? It's like going to Vegas and hitting red every single time. You just know it's so easy, right? It always works, right? But then there was this major downturn with a lot of companies, novice sponsors, novice investors suddenly losing everything. And that has created had a very negative impact on the capital raising industry. It's become incredibly difficult to raise capital. Not impossible, but a lot harder than it was because people who have experienced real estate investing for the first time have also experienced losing money for the first time. So that's been, I think, probably the biggest impact, Badri, but also the unpredictability and the uncertainty that is clearly not unique to commercial real estate. It is a worldwide phenomena right now, is also causing people to hold back and to just kind of wait and see how are things going to roll out. What's going to happen before they pull the trigger. So I think those are the two major factors driving capital formation in real estate at the moment. Do you see the same? I mean, you've got hundreds and hundreds
I
of.
do. I do.
Yeah.
It's very interesting. I mean, like I indicated, I invest in a wide range of asset classes, but being a part of the Avestor team, we have launched over 200 funds. And so in literally every asset class, I mean, it's so many interesting business models we see, right? I mean, every asset class in real estate, multifamily, self-storage, retail, hospitality, ADUs, mobile home parks, and we have several company funds who have invested in startups and some funds who have invested in crypto, forex. So, but one thing which is like, there are headwinds and there are tailwinds, like in any situation. One of the tailwinds we are seeing is there is a lot more openness for investors to consider alternative investments. So because big companies are now getting into and are trying to get private equity down to the masses and are trying to get alternative investments to the masses. You saw the announcement from Blackstone. BlackRock is trying to get more of an ETF type of a model. And so it is really more of an education thing. And I think the successful capital allocators will build the education well in advance. If they're planning to go into an asset class, I think you have to build courses on that asset class and educate investors before you start pitching to them, right? So there are tailwinds and headwinds. I mean, we thought that the deregulation, which our new president offered, will be a tailwind. It is, but that is accompanied by a lot of uncertainty and the tariff barriers, which is a headwind. So, like we were talking just before we started, I didn't pay that much attention to the news. Now I have to get up in the morning and say, let's see what's happening today.
That's right. Are there tanks rolling down the street today? It's like you're not quite sure what's going on. So let me actually ask you something, how this works with the, and I know this isn't a promo thing for Avestor, but this is something that I'm interested in. So the customizable fund, this is an interesting product. So your typical fund, right? The ones that I'm used to through all my years in just in commercial real estate would typically say, we're going to go out and invest in multifamily with these criteria or this asset class with these criteria, but we don't know what yet. And so investors would invest in an investment thesis, right? They would buy into the idea that this team is a solid team and they're going to go out, they're going to buy things that fit certain criteria, and I'm going to trust them to stick to that and do it well, right? Then they made an investment, and then their investment would be spread inside. Basically, all the deals inside the fund would be aggregated, and my returns would be based on that. So that's the traditional fund. Now, your fund is fundamentally, if you'll excuse the pun, fundamentally different from that, isn't it? In the way that, just explain it, because it's very interesting. It means that you can invest in a fund. An investor can invest in a fund, and they can say, I don't want to invest in that, but I do want to invest in that, and I want to put even more in number 4 over there. It's an interesting structure. How did you come up with that?
So what we really started off was trying to solve the problem from an investor perspective. I mean, the goal was not to really solve this problem for a sponsor. Think about the experience which the investor has today. I mean, he has to look at hundreds of deals, put a 50 or $100,000 in each deal, and then sign a 60-page or a 40, 50-page PPM, 80% of which is boilerplate. So we built our own fund to test out the investor capability. And sorry about that. I need to shut off my phone here. And we are really trying to bring the stock brokerage experience to alternative investing. That was the goal. And then once we built our fund, other fund managers came and said, what you have built is incredible. Why are you opening it up only to your fund? So we pivoted a little bit and opened it up to other fund managers. And basically what the customizable fund does is 3 things. One, it brings the stock brokerage experience to alternative investing. And it combines the best features of syndications and funds. I think most people in the call probably know what a syndication or an SPV is. So like a syndication, investors can pick and choose how much they want to invest in each deal. 100% of the depreciation benefits flow through. And you hit the nail right on the head, because today, when you do a blind fund, you need to have a well-defined thesis. And if you deviate from the thesis, then you may, pardon the language, piss off your earlier investors. Hey, you told me you're investing in multifamily in the Sun Belt. Why are you going into mobile home parks, right? Whereas the customizable fund allows you to give a very, very flexible business model which can invest in any asset class, and investors can pick and choose, and this gives the sponsor amazing business flexibility. So that's kind of what.
Right, and so this is what's kind of bred what I call not bred, but has contributed to the growth of the allocator business, where you have somebody, and this is, correct me if I'm wrong, but typically you have somebody who would come set up a fund on the Avestor platform, and then they will go out and cut deals with sponsors, bring them into their fund, and then go out and find investors. Now, so I got a couple so correct me if I'm wrong. That's basically what it does, right? That your clients are allocators typically.
Not quite. If I may build on that, we have actually about more than 55% of our, it's equally split. About 55 to 60% are sponsors actually now, and 40% are allocators. But let's define that term allocator. I know you're an expert on that, but let's define that a little bit for the audience. An allocator is almost like an investment advisor, but you don't have to go through an RIA process where you are screening deals from multiple asset classes, and your job is mainly screening deals and negotiating preferred terms. And we help, Avestor actually helps to do that too. We negotiate on behalf of more than 400 fund managers now, 350, approaching almost 400 fund managers. And then the way you make money is you take a portion of the promote. So maybe you negotiate a 85 or a 80-20 split, and you pass a 70-30 split to your investors and take 10 or 15%. And then you can also take a due diligence fee, similar to an acquisition fee, which a sponsor takes. So, but going back to your question, there are really 3 broad categories of clients we go after. One is sponsors who want a much more efficient way of doing multiple syndications. Instead of paying for a $15,000, $20,000 for a PPM and paying separate blue sky filings and doing separate accounting, separate taxes, we kind of combine all of that in one platform. about 35-40% are allocators who are screening these deals. And then about 5-10%, and we want to increase that percentage, are debt originators. So these are people who are actually loaning money out to fix and flip operators. They're operating debt funds. And by the way, speaking of trends, debt has become very popular. So those are the three categories we are going after. So, mhm.
So you mentioned, actually, interestingly, you mentioned that you have, and I just popped something into the chat. So I don't see any questions yet. So come on,
Exactly.
if
Please,
lots of
please do
people, if you've
start.
got questions, please ask. Um, so Badri, you also mentioned that you have some funds that are specific, that are not in real estate, like crypto or forex, etc. Okay, so do you have any funds that mix totally different asset classes? Anyone set that up where we've got crypto, forex, and we have a mobile home park in Alabama?
We absolutely do. We have many funds. In fact, most of our funds are not uniform. They mix multiple asset classes. And now, there are some restrictions on what you can do. For example, you cannot mix opportunity zone with non-opportunity zone funds. You cannot mix oil and gas. We have oil and gas funds with non-oil and gas funds because, as you probably know, oil and gas has special treatment where you can offset income against regular income. So this
Right.
is not a limitation of Avestor as such, but it's really a limitation of the laws of the land. So, and you cannot mix 506B deals versus 506C deals. But in fact, I would say the norm is people putting multiple asset classes, and that's the beauty of a customizable fund. So,
Mm. So
now,
Chris, actually, good friend Chris Germain here has asked a question. I'm going to paraphrase it because I know exactly what he's asking. So inside Avestor, you have this, you called it boilerplate. And I have to tell you, I hope there's no lawyers on the call. But 90% of these blooming documents that I see, they really are just copy paste. We used it last time, so we're going to put a different name in it this time, and not copy paste. What's it called? Replace, right? Find and replace. So this name of the deal instead of that. Here it is. And by the way, here's your $25,000 bill for doing that. Now you have a slightly different approach, don't you? You have when somebody comes into Avestor, you provide, and I'm going to use this term, a boilerplate PPM, but there is something else, isn't there? You call it
exactly.
something else, like it's, so explain how you do that. It's interesting.
Exactly. No, that's a great question, Chris. So basically, what we do is we are really a lot more than a platform. We become your strategic business partners. During the
Mm,
onboarding process, we try to ask what asset classes you want to go after. It's not that you have to do that asset class from day one, but you must have some idea in the next 2 or 3 years which asset classes you're going after. If you have zero idea, well, that's another problem. We'll work with you to identify the asset classes. And then we identify the risks. So when we say boilerplate, our PPM is customized for every client who comes along. It identifies the risks specific to that asset class. But then what we do is we take that 15 or 20% of the PPM, which is different from each deal, and we have developed over multiple years something called a deal disclosure document, which identifies the terms specific to the deal. Now, this is an 8-page document as opposed to a 60-page PPM. It identifies 8 to 10 pages. It identifies the risks for that particular deal, any conflicts of interest, the waterfall for that particular deal. Maybe you're offering 80-20 split. What is the manager compensation? And investors love that experience because now there is no way they can say, hey, I missed that in the 60-page PPM. It's very clear and right in their face saying, okay, these are the terms. So for each deal, they sign a deal disclosure document, and that's how we separate it out. There is a
how do you
boilerplate.
produce that? Sorry, Badri, I didn't
We
mean to.
have various
Yeah,
templates. We are
yeah.
working on integrating it into software itself. So we have various templates, and whenever there is a deal, the people, fund managers want to add to the platform. They come in and they talk to one of the co-founders or one of the business partners, and we help them develop that deal disclosure. And by all means, you can get it reviewed by an attorney if needed, but you're paying a few $100s for a review as opposed to several thousands or tens of thousands of dollars for a PPM. So
Yeah, or even $20 a month if you use ChatGPT.
there you go. There you go.
Totally kidding about that. Okay, so yes, so that is a very interesting structure. Shall we have a look at some
Yeah.
of these other questions? We're a little bit off
Yeah,
the
let me
quiet.
address RJ Johnson's. So if
Yeah,
using a fund of fund, the person setting up the fund is not a true operator. So as the fund manager, you will be 100% of the overall performance of each sponsor. If you are a capital allocator, that's absolutely right. That's like saying an investment advisor in the stock market is dependent on what stocks you pick, of course.
yeah.
So if you're a capital allocator, remember, more than half of our fund managers are not capital allocators. And but if you're a capital allocator, you're dependent on the performance of the sponsors. But the one thing I would add is that we also act as a matchmaker. The beauty of the platform is it's equally split between sponsors and capital allocators. And so we introduce our sponsors and we have a deal sharing Thursdays where our sponsors can present to other capital allocators. And here is the key thing: all the sponsors and the operators who present are required to offer collective terms to our Avestor fund managers. What do I mean by that? It's almost like a collective bargaining agreement. So basically, if four fund managers raise a half a million each for a $2 million for the deal, they're getting the, it's no rocket science. If you get better terms if you raise 2 million than a half a million. And they get the $2 million terms because the Avestor fund manager community collectively raised $2 million. Yeah. So
And
that's part of it.
do sponsors typically structure their deals initially in order to accommodate larger investors you find on the Avestor
That's a
platform, or do
great
they do it
question. That's part of
afterwards?
what we educate them on how to structure the deals to appeal to other fund managers. So,
Mm,
for example, we recently introduced a syndication product. If a customizable fund is not ready, we understand a customizable fund may not be a fit for everyone. And the syndication product we believe will revolutionize the industry. It's 4 deals, 4 syndications, unlimited investors, unlimited AUM. Will allow you to present your deal to fund managers $400 a month. I mean, it's most of the other competition out there scales based on AUM, whereas our syndication product is 4 deals, unlimited AUM, unlimited investors, $400 a month. So
right. And and forgive me for saying this though, because that's the only term I know, but that is basically what they're getting is the back end system. So this is
the back
investor
end, not the
management.
strategic consulting, not the
Right.
capital allocator community, not the mastermind community. That comes only
Ah,
with our premier customizable fund product. But
okay.
if some people just want a tech platform, and we want to offer that community as well. I mean, if you just want the tech platform, you don't need the strategic consulting. You don't need. We do the fund accounting and bookkeeping. You don't need that. If you're doing all that yourself, go
Mm.
for it, and we'll offer you just the tech platform for $400 a month. So,
Okay, so Arlette has asked an interesting question,
okay.
and that is there a maximum size that somebody can run a fund on the Avesta platform? And what's particular, because I think the answer is no, there's no maximum size, but you can comment on that. But what's interesting to me about that, her question, or Arlette's question, is do you see any institutional investors or like what kind of sponsors and allocators are you seeing on the platform? Whose attention are you attracting?
To be very candid, we are more in the small to medium-sized funds. For example,
Right.
I was talking to somebody who was managing a $10 billion fund, and I said, we do large funds, and we can go up to yes, a few hundred million. He said, few hundred million is peanuts for me. I mean, because he came from Goldman Sachs and they manage a $20 billion fund. We are not in that space. But to answer Arlet's question, yes, you can go beyond 100 million, but then some other laws kick in and you may have to be registered as an investment advisor. We'll help you with that, but you may have to become an RIA. So I would say 100 million is a good size. If you're really creating a $500 million fund, it's not that we cannot help you, but you may have to be prepared to become an RIA to run a $500 million fund. It depends on both state and federal laws. Yeah. So
This is an interesting question as well. By the way, if you want to get off the questions, just let me know. We'll talk about anything that you want. We'll talk about
Great.
Japan again.
Maybe we'll do a few more questions, and then maybe you can talk about, what are some channels we can use, and then we'll come back to the questions. So
Yeah,
let's keep
actually,
it
so,
little
people
bit.
were asking about AI. I got a few people asking me during the week about how I use AI. So maybe
Why
we,
don't you do that? Why don't we start with, we will come back to all these questions, because
okay.
I want this to be a broad range of topics, and I want you guys to walk away with a lot of broad educational experience.
Yeah.
So, you'd be sitting in under a rock if you're not heard of AI by now, and it seems to be affecting every impact of, I mean,
Yeah.
every facet of our life. I read a great book, The Coming Wave by Sulaiman. He was the head of DeepMind and the former head of Google. Bill Gates called this the best book ever written on AI, and the one book you should read. So it's
Wow.
just amazing what kind of impact we have. But why don't we, instead of talking about AI and synthetic biology and all that, I would love to, if you have time, let's focus on AI and capital raising. Tell me a
Yeah.
little bit about how you see AI being used in capital raising, and then we'll come back to some of this
Yes.
other.
It's a really good question, isn't it? Gosh, what did you say? Synthetic biology. Is that the term?
There we go.
It's like the
Synthetic
mind
genes. I
boggles.
mean,
God. Yeah, yeah. So, I mean, when you talk in terms like that, what I do is incredibly primitive. But in comparison to what most people do in commercial real estate, it's actually quite advanced. So, okay, so a couple of things. Word of warning to all of those allocators. And I've been talking to a lot, actually, of you guys on my podcast. Oh my goodness me, in detail. You should definitely tune in. You'll hear some of your fellow allocators discussing their stories. But one of the biggest problems in the industry at the moment is that it has become incredibly easy to get into the business of raising capital for real estate. Now, it wasn't that it wasn't easy to do it before. It was just, it wasn't done. Right? When I started doing this, I mean, I started raising capital in 1980, well, probably mid 80s, from ground up multifamily shop. I was all in person. But when it went online in 2012, in theory, it was easy to do, but nobody did it, right? But there's a lot of resources available. One of the biggest resources is some of the conferences that you see, where you go and learn how to be a capital raiser, and you walk away with a huge library of video training and templates. So, what that's done is it's leveled the playing field so that more and more people can get into the industry, set up businesses on Avestor, and have all the resources. In fact, some of them I think you guys provide as well, have all the resources that they need in order to be able to build a website, write some posts, blog posts, post some stuff on LinkedIn, and send out some templated emails. Well, what does that do? That basically, because so many people are using the same core resources from the same places, everybody sounds the same. So the impact of AI, and by the way, I see this because I'm on LinkedIn. I go on LinkedIn hour and a half every day. I can't believe I even just said that, or even that I do that, but I do every morning. It is unbelievably powerful way to network and find investors. Badri, you came off mute. You were going to say something.
oh, no, no, I love what you have done on LinkedIn. I mean, I know you are, some of your responses have been, the amount of responses you've got for your posts. Would, if you have time, maybe you can talk a little bit about some LinkedIn strategies too after you finish your discussion on AI. Please
Yeah.
proceed.
So after I finish my dissertation, so I keep on going. But yeah, just switch me off. Somebody can mute me out if I go on too long. But so the point I'm making is that so it starts with these templates that hundreds, if not thousands, of people have and are just reproducing. So it creates this uniformity. Everybody sounds the same because they're all using the same core product. And then inject AI into that, where you take a template and you say to it, give me 100 versions of this. And then you push that out to everybody. Actually, it all starts to read the same. So back to your original question, Badri, what are the challenges in raising capital today? Well, one of them is that there are a lot of capital raisers who all are beginning to sound the same out there. And so it's becoming increasingly difficult for investors, passive investors, accredited investors, to differentiate one from another. In fact, it's becoming increasingly difficult to tell the difference between an actual sponsor and a capital allocator, because the allocators speak the same language and use the same jargon and language patterns as sponsors. So it's actually really difficult. I've been trying to figure out how to tell the difference when I first meet someone, Badri. Seriously, like on LinkedIn, I get hundreds of requests to connect all the time. It's like ridiculous.
We see that in sales calls as well. So they say, hey, I do this. Do you really do it? One of the topics we should talk about is co-GPs, people calling themselves co. That's
yeah. So I have a solution for it. So I've actually figured out how to tell the difference. There's one that is the kind of, well, there's one that's a simpler one, there's one that's more technical. The simple one is to ask, what do you do for a living? And if somebody tells you, if so, you can tell they're an allocator because they will say this: I help my investors earn passive income, build wealth, and gain financial freedom. If that is what they say, or it sounds like that, they are not a sponsor, right? That's no sponsor talks in those terms. The second actual technical way to determine who is actually calling the shots is to ask. And the way that you would ask that is to say, do you have material decision rights? Do you get to choose which bank and how much debt? Or do you get to decide yes or no on an acquisition? Or do you decide on when to sell? And if the answer to any of those questions, or to all of those questions typically, is no, you're not the sponsor. But it's actually, but investors don't know that. They can't tell the difference. And so now you have this world where everybody sounds the same, and it creates a lot of noise and a lot of confusion. So how do you leverage AI to make the difference and to stand out? You've really got to stand up above this noise. And the nice thing about the noise, like I said, it's like white noise. It all sounds the same, right? It's like everyone's making the same noise. So how do you differentiate? You have to, and actually this is something very difficult to do, Badri, I think. It's taking me a lot of time to figure out how to do it personally. And
can you give some
actually,
guidelines on how you do it?
I'm going to say in a second, and also a little bit of courage. And that is to really dig deep into how one views the world, not how the world has caused me to see it, but what is my relationship with the world? How am I seeing the world? How am I reacting to it on a day-to-day basis? What are the things that are triggering my actions? And identifying what they are, and then writing about that. And that is actually how you differentiate yourself from everybody else. If all you're talking about is, I've discovered a great way, here's a great way to earn passive income through real estate, you sound like everybody else. But if you talk about, lessons learned in a different industry or different time in your career that you're reflecting upon today because something similar happened today in the market, you're really sharing something a lot deeper with your prospects. By the way, there is something else. There is another way of looking at this. Sorry, I just finished. I've kind of carry on sentence.
Oh, please,
but there's another way that I see this. So the sense that I get from a lot of allocators is that they want to sound like a seasoned multi-cycle sponsor. I had a client come through the door some years ago, and this guy was streetwise, and he not very sophisticated, but very, very good at what he did, which was value add multifamily. But he was self-conscious, and he thought, I don't have the language and the skills and whatever to really communicate with people. So I want you to create a persona for me that is of a New York high-rise private equity real estate guy. That's what I want people to see me as. And I said, listen, if that's what you want me to do, I'm not going to take you on. We're not going to take you on because I'm not going to create a false impression. Not because you shouldn't do that, but because what happens is when investors eventually meet you, they'll realize that everything they've seen is false. Yeah, they'll walk away, they'll run
That's the
away.
biggest mistake you can do. I mean, they will know immediately. And I mean, I think the biggest, you'll be doing him a big favor by telling him not to do that because eventually people will know and he's pretending to be someone you're not is the quickest way to failure, in my opinion. So.
Yes. And so I think the trick for allocators who are raising $500,000 or $1 million for a deal, so modest numbers, is the way that I see it is it's a bit like I come from England, and we were called a nation of shopkeepers. That's what they called the English, was a nation of shopkeepers.
Well, I would say the nation of shopkeepers did very well for themselves, coming from
We
India.
did do
We
well.
won't go there.
But so how did that work? And so think about it in your own world. So you have the option. I live in a relatively small town here on the Central Coast. I'm not in LA, or I've lived in LA. But the stores that you really like going to and the ones that you feel the most comfortable going to, even if their prices are a little bit higher or they don't have quite the selection, are the ones where you know the owner and you are welcomed by the owner. A restaurant, like a small restaurant instead of a chain, right? A single, and you go in and the owner's there and welcome back and they see you, and right, you have a relationship with them. That is, instead of going to a major chain, that to me is how to really conceptualize or to contextualize how you should raise money. People will invest with you, not because you make this show of being, a big moneyed, I've got hundreds of millions of dollars of AUM, and you look at the websites, it says 500 million of AUM and 5,000 units, but actually all it really means is they've invested $1 million in this huge portfolio, right? And so it's, no, don't try to be
Get
that.
me started. I mean, I think that's such a misleading statistic. They may own a doorknob in 5,000 doors. That doesn't mean that they're the operator of 5,000 doors. Very misleading.
Yeah, it's like saying my portfolio's worth $200 trillion because, I've invested with Apple or whatever, 2 trillion. It's like I've got a $2 trillion. No, it's not like that. I've got $20 with Apple. That's about it. But so the way that I think it's important to start understanding how to be successful is to, and maybe this isn't the right way of saying it, and it's one of the first time I'm actually articulating it, Badri, but I've been thinking about this a lot, is to think of yourself as the local shopkeeper. You're going to people that you know to raise money. So be authentic with them. Tell them what your story is and why you're doing it and how you're trying and the effort that you're putting in and how you're bringing skills from your prior life into raising capital, and be personal about it. That's what will help you stand out from everybody else, and that's what will help you raise money. But if you pretend to be a big private equity real estate multi-cycle seasoned professional, people will see through. It's like the emperor's clothes. They'll see through you immediately. Anyway, I'm going to stop talking about that. But AI can be used to accentuate your authenticity. And it's something that I teach, actually, is how to do that.
So, no, that's wonderful. Why don't we take a few minute deviation to answer some questions very quickly? A couple were
Yes.
for you, a few for myself. So let
Fine.
me very quickly answer this. I won't get into too much detail.
So
Let me take about 5 minutes and then we'll come back to some other topics of like co-GPs and I mean, that's a favorite topic of mine. So
co-GPs, all right, good.
I know people who call themselves co-GPs, right? So various questions. How does Avestor compare with XXX? I'm not going to mention specific competition. So the main thing to think about Avestor is don't think of us as a platform. Think of us as your business partner. And I know this sounds very cheesy, but comparing us with a tech platform is like comparing a steering wheel to an automobile. We can have all kinds of academic discussions on my steering wheel is better than yours, it's thicker than yours. But are you looking for the full car or are you just looking for automobile? I'll just leave it at there. In terms of pricing for Avestor, we have syndication plans which start at $400 and customizable fund plans which start at 600. A quick question from Jordan. I'm an operator manager, but I'm not sure looking to do larger projects, not sure how to partner with money raisers. That's exactly part of the value we provide. We help you structure your deal so that you know how to structure it for fund of fund managers. We have experience structuring hundreds of deals and we'll tell you what's attractive, what's not attractive. And at the end of the day, we'll give you advice. It's ultimately what you have to do. Yeah. A couple more questions on the questions, answers, and then I'll come back here. Can a debt syndication just have a promissory note? No problem. We can do a debt fund where you can do a promissory note. We can work through that, set up a time with us. How do K1s work? That's one unique thing about a customizable fund. We have literally spent hundreds of thousands of dollars and tens of man years developing a custom module where you'll generate a single K1, even if your investors invest in 7 out of 10 deals. And so we help you with all of that. Yeah. So a couple more questions. I'm a small fish looking to learn, and we have several people who have done rehab and fix and flips. And so we'll help you if you want to really scale your business. That's where we come in. If you can do it with your own money, then you don't need Avestor. Yeah. So do investors work with companies in other countries? Absolutely. We do have projects. Most of them are in the US, full disclosure, but we do have projects in other countries, and we kind of have foreign investors also invest in the fund. So let me take a pause here. There were some questions from you. One question is, what's your website, Adam? And can you recap what you do? Because he said he missed the first couple of minutes. And then you've been generating some impressive post images on LinkedIn. Have you become an expert on Canva, or do you have a secret designer? Why don't you take a few and then we'll
I tell you something, so there's a very embarrassing question here for me. But I'm going to get to that in a second. So to answer your question, no, I actually do all my own images, mostly because I wing it at the last minute and decide how am I going to present this thing. And I've kind of got a system down, so I'm able to do them quickly. And I have a lot of fun with them as well. I actually really enjoy the process. So the embarrassing question for me is, what does Adam do? Yeah, I'm still trying to figure that out myself, actually. It wouldn't be so it won't be so difficult to explain it. But my core business is helping sponsors, raise capital online by building sophisticated digital marketing systems for them that is primarily content based, but there's a lot more to it than that. We build websites, we populate with content. It's all authentic, genuine content, pushed out on social media, and then we engage on behalf of our clients in marketing to help them drive investor traffic so they can raise money. Like I say, our clients have raised probably $1 billion. I gotta be careful. I don't want to overstate, but up to probably getting close to $1 billion with $25,000, as low as $25,000 minimums. But I actually also do teach it. And I'm going to be hosting a mastermind where I will teach everything that we do for our private clients in a 4-week mastermind, 8 sessions that will come up, I don't know, probably in April, probably after tax day, I think. So late April, probably. Yeah. So those are the questions that came in my direction. I will tell you though, actually, I will tell you that, what are we doing for time? We've not got much time.
Yeah.
So
maybe we cover a couple more topics, but go ahead if you want to finish your train of thought.
Yeah, I was actually going to. So, Chris talked about my LinkedIn posts, and you've alluded to it as well. I had the pleasure. You actually mentioned him when we first met, Badri, months ago, late last year. You said, "Oh yeah," I asked him, "How do you deal with tech stuff?" So we have this doctor. You said he does it in his spare time. Anyway, so I met him. What a charming man, Raj Venkatramani. Took me a while to figure out how to pronounce his name. Raj Kumar Venkatramani. It's a beautiful name. Anyway, so I met him. He came on my podcast as well. And I asked him a very important question. I asked all of my guests, who all basically answer the same thing, but not quite the way that Dr. Raj did. How do you find, or what do you find is the best way of finding more investors? And without hesitation, he said LinkedIn. He said he's raised $20 million in 2 years exclusively for making connections on LinkedIn. Oh my goodness me. Isn't that amazing? That is mind blowing. It is. I mean, we've spent probably $1 million or more on Facebook advertising, for crying out loud. And the one thing about Facebook is that they make it really easy for you to spend money. You set up the campaign, it runs automatically, right? They do all the calcs and all the whatever optimization for you. You don't have to think about it. And every $900 they bill you. You get a ding on your credit card. But the quality of the leads is appallingly bad. 2% convert. They're really bad. Whereas on LinkedIn, I would say 70, 80% are legitimate leads. It really is very, very powerful. It takes time and commitment, but yeah, and we've been leveraging it extensively using AI to create authentic posts, and all kinds of other stuff actually on LinkedIn. But there's a lot of layers to using AI on LinkedIn, but it is amazing. Are you on there very often, Badri? I do see you post occasionally.
I have a shameful admission, but I'll go ahead and do it in public. I'm just so worried with all the funds coming on board with Avestor. So all my LinkedIn posts are done by by Anupriya, who's on the call.
Hello, Anupriya.
She's been telling me I should be doing more personal posts. That is a goal of mine, just haven't had the time. I do understand there is a value of writing the posts yourself, and I don't know how many people use a VA or a marketing person to do their LinkedIn posts.
I think a lot of people do.
Like you should really spend your own time, but I just haven't had.
I do, yeah. I actually really do, and I think it's worth it because I see a lot of people. It's very transparent who uses a VA to do their posting and also their commenting. It's just obvious and kind of sad, really, because I do it. I don't mean that rudely. I'm being just straightforward because I do it myself. I can tell I'm having actual conversations with prospects at scale in a very rapid period of time every day. It's very, very efficient. You can identify who is going to be a good prospect and then draw them out of LinkedIn, bring them into email, and now move to convert. And it's very effective. But you're building a business as well, and so am I. But this is the way that I build the business. Hang on, there was something. So here's a suggestion. So if Anupriya is telling you, please do more personal stuff, actually what I would find absolutely fascinating, if next time when you go to India and you go to Silicon Valley, what was it called? You mentioned it before we started this webinar today. What's that area called again?
I originally came from Bangalore. It's called the Silicon Valley of India.
Bangalore. Is that me saying the right thing, but with an English accent? Bangalore? Yeah.
There you go. You got it.
Close enough, right? Okay. All right. I would love to see pictures of that. Like, what is it like there? We hear so much about it. And your business is, you've talked about that, you've got teams there and teams here and all kinds of things. To actually see what that is, it would be fascinating. I just don't think I've ever seen any pictures of, I don't mean to be weird or anything, but any pictures of India other than the Taj Mahal. That's basically all you ever see, right? People come, oh, look, here I am, right, in front of the Taj, and that's about it. But some business related stuff would be interesting as well.
I think so. I'll keep that. I did post a few, but Yeah, there's always a trade-off, right, between the time you spend on it. But I completely agree.
Sure.
But having said that, what I do is if a particular lead comes from LinkedIn, it does eventually go to our marketing emails and GHL, and then I do take over that conversation. And there are some responses from LinkedIn which I still do, but it's a bandwidth issue, right? So
It is a
one thing you can
choice.
do,
Yeah.
Adam, is I know your LinkedIn mastermind is very nice and very affordably priced. So if you want to, I don't know when your next LinkedIn mastermind is, if you want to just put Adam does a great job on the mastermind he runs, which teaches how to effectively use LinkedIn. And so I'll let him put that in the chat window.
Well,
We're
thank you.
getting
Yeah.
we're getting close to the hour. I'm more than happy to stay back and answer more questions. But if you want to know more about Avestor, I know you joined because a lot of this went out to our marketing email list. I'm putting my personal email address. Feel free to reach out to me, and I'm happy to answer any questions which I may not have addressed. And if you have any final questions you want us to address, do let us know. We will be sending a recording of this event to everyone who attended, and sorry, everyone who registered, even if you did not attend. And the intent of this event, we plan to do this more often, is just have open conversations about what challenges we have in the industry. This is not a replacement for a marketing conversation. I mean, if you want to learn more about Avestor, we have a completely different mechanism. And I'm going to also put that also. If you want to book a strategy call, and there is a lot more information about the power of a customizable fund. We pioneered that concept. I'm just going to put that booking call there too. So if you want to look at the video there and book a call. So. Adam's email as well.
You said you're sending out a recording, right? There is a recording.
Yes, we will send a recording to everyone who's registered for the webinar. Any final questions you would like us to address? And I don't know if you have to leave immediately, Adam. We can officially wind down the webinar at 11:30 Pacific. But if you have a few minutes, if people want to chat, we can. If nobody has any questions, we can. One question. When can
we didn't talk about AI.
Event? We plan to do this, I think, every month or two. We have received very positive feedback. And I know Adam is always interesting. Maybe we'll repeat this with Adam. And one webinar which was very well received, and we'll repeat that. Me and Sanjay, the other co-founder in Avestor, we did the top lessons learned from launching over 200 funds. And we plan to do that as well. So.
Okay, so I'll tell you what, as we're in overtime, Badri, I almost in overtime, 1 minute before we go to overtime, Arlette has exclaimed that we didn't talk about AI. So how about this for a couple of minutes? Do you want me to screen share and I'll show you some kind of cool tricks with ChatGPT that we
go
use?
for it. And whoever
So I
wants
do
to
that?
say, we may go a little bit over, but
yeah.
We talked about AI at a high level, but I do agree. I mean, we talked about the impact at a high level, but if you have some specifics, that would be great. So.
Yeah, I mean, just some kind of cool hacks that I use. Is that okay if I do that, Arlette? I'm responding to Arlette's exclamation that we didn't talk about AI. So I'm going to go ahead and do that. Let me just share my screen if I can. Screen number 1. There. Okay, so where's everyone gone? There we are. So can you see my screen? It just says, what can I help you with? Or what can I help with? Yeah? Badri, that's the screen you've got?
Yes, I can see that.
Okay.
Yes.
Right. So I'm going to show you a few things here. I'm just going to run through these really quickly. Some really good tools. These are tools that I use for my LinkedIn every morning. So every morning I spend an hour on LinkedIn from 5:30 to 6:30 trying to make 20 to 30 comments while my post goes out at 6 a.m. So 20 comments before 20:30 before 6 and the same afterwards. It's a whole process. It's a whole system. Very, very effective. But how do you do that effectively? So the first thing, I'll just do this really quickly. So I have these lists that I have created that are all avatars, for want of a better term. So these are all groups of target market. These are all people who fall into a very specific avatar group, right? And this particular group is a group of people that just went through the last mastermind. So by setting it up this way, I can see every post that all of these people made, 24 people in the last 24 hours. So that saves you from actually having to go into your main feed and just trawl through the infinite scroll to try and find something interesting to talk about. What you want to do is to create lists of target audiences, specific characteristics, and then you comment on those. But how do you comment? Because some of them, like Jay Parsons. So Jay talks a lot about housing, and he's very, very detailed. So almost all of his posts, look at this thing. Okay, so at 5 o'clock in the morning, there is no way on earth that my brain is going to, especially when I want to do 20 to 30 posts in half an hour, it's one post every 60 to 90 seconds. There's no way that I'm going to be able to read this very interesting post, because he always has interesting posts, Jay, and comment on it. So what I've done, there's a couple ways that you can do this. You can either say, give me a one sentence summary. And by the way, ChatGPT will learn your style and it actually gets to know you. So that's one way of doing it. You just give it an instruction. It's called a prompt. Summarize this article. Now I can get the general thesis in one sentence, so I'm able to jump back and very quickly and now produce a comment without actually having to read it. I hope Jay is not listening. He might not like that. But here is a tool that is brand new on ChatGPT. It's called Projects. So if you look in your left-hand column over here, Projects, you can add a project. So call it something. And then this is what they look like. So because I do one sentence summaries all the time, and I don't want to constantly be writing, give me a one sentence summary, I created a project called One Sentence Summary. So I can click on that. And inside here, by the way, it's all intuitive to build this. If you click create, it'll guide you through the process like this here. But add files or instructions. So in the instructions, I've got something that says, give me a one sentence summary, right? With a little an addendum there. So now all I need to do is in the morning, I go straight to this project and I hit, give me a one sentence summary. I don't have to write anything. I can just drop the text and it's going to give me a one sentence summary, hopefully. Sometimes it goes on a bit and doesn't quite get it right. So there you go. So now that's super efficient way of getting to one result. Now there's another thing that has just been developed. These came out in December, and these are called, where are they? Tasks. So if you go into tasks, again, you go over here to your profile, you can create a task. And the thing that's cool about tasks is that it will send you, oh my goodness, it will actually send you an email. So with a task, I have asked ChatGPT, I say on every Friday morning at 10 a.m., run this search and deliver the results to me. So I like regulatory commentary. So research or search for recent commentary, statements or reports from key financial regulators, all right? So from the SEC, Feds, or FDIC, etc. And so what happens is that I actually get, and I forget that I do this, but every Friday morning, I get an email that says, here are the latest results. And I can just click on that. And what's great about this is it keeps me in tune, but it also gives me really good ideas for what to write about on LinkedIn or actually in my newsletter. Just as a side note, what I have heard other people use tasks for in ChatGPT is give me a workout for the day. Right? So give me a workout every 5 a.m. Send me a workout. And this is what I'm trying to do. I'm trying to get buffed up, or, I want to get slim, or I'm losing weight, or so. And so it will send you a workout. Apparently, it works really well. Here's something else. Just tell me when to stop. All right, Badri. But let's say if we go to one of my posts this morning. So you notice this little thing. Here is a one sentence. Here's a prompt. It's a very simple prompt that said, give me a one sentence summary. And then I dropped this commentary here, and that's the result. Well, if you want to edit the prompt, you don't have to redo it and then add the same thing. You can just go back to this edit button, click that, and now I'm just going to change the prompt, the instruction. Okay. And so I'm going to say, give me headings with subheads to explain this, the following, right? Headings and subheads. And now I click it again. You can see here that I've got two answers. So the first answer, I don't know whether to say that with an English accent or an American one. I'm going to go with the American. The first answer is my one sentence summary. But the second one is how I edited it the second time around. You see, here's the first one. Here's the second one. Whoops. Where is it? There. This is the second one with my second prompt, my edited prompt. So now I have the same article highlighted in with headings and subheadings, so I can scan it quickly. So what I'm showing you there is how to edit a prompt so you can redo it. Can I show you one more thing, Badri?
Please, go for it. Go for it. And we'll try to
So
wrap
the
it up by
last,
11:45. Yeah.
okay. So the last thing that I would say is you want to be writing authentic content. And in the LinkedIn training, I get into some very detailed stuff. But you want to be writing authentic content. It has to be your voice. So the other thing you can do is you can actually create a GPT. It's actually called a custom GPT that speaks with your language, your voice, your thinking, the way you see the world. And the way you do that is you go over to GPTs, my GPT. So I created one. You can see one says here, create a GPT. So you click on that, but I'm going to jump to this one. It's already created. And inside it, and it's really intuitive. ChatGPT just walks you through it. If you're not sure what to do next, just ask ChatGPT. I'm stuck here. What comes next? They'll tell you what to do. But basically, what we've got here, these are all PDFs that I compiled and uploaded to ChatGPT. And these PDFs are all of my training, dozens and dozens of hours, 50, 60 hours of training in how to invest in real estate and due diligence processes, etc. Almost all of the podcasts I've been on, when I've spoken, that's what these PDFs are. So now, when I ask Adam's personal GPT, which is what I called it, a question, it is going to draw only on this training, my language patterns, the way that I see the world, to give me an answer that is legitimately and authentically me, and not something it's picked off the internet. Okay, there's a few quick ChatGPT hacks that you can use and that we use all the time. How's that?
That's really cool, Adam. And I know Adam gave a great talk, which is part of, we have a weekly mastermind where we invite speakers like Adam. The educational content and everything is combined in Avestor. I'm not selling Avestor here. I'm actually trying to sell Adam here now. He gave a great talk on LinkedIn, the use of AI, and all those recordings are available to Avestor fund managers as well. And I definitely encourage you to attend Adam's mastermind when it's available. And a great example. And maybe we'll repeat this and maybe have a little more deep down into some of this. So thank you so much, Adam. You've always been entertaining and informative. Both are important. Any final questions before we drop? We are a little over, but I think that last 10-minute discussion from Adam was very valuable. And that's just a snippet of what he can provide. So, any other final feedback? Oh, how do we sign up for Adam's Mastermind? Did you put that link in
I
the
thought I
chat?
did.
I know
Yeah.
there's
Yes. It's actually, I'll tell you what, best place to find it easily is go to Gower. Actually, my LinkedIn profile has it. And it's also at gowercrowd.com. But we've literally just finished one up last week. So there's just a wait list now, but I'll put it into the chat. There it is. Yeah. And by the way, sorry, just to answer Mike Gensler. I actually use I don't know what I use, if it's Plus or Pro, but I pay $20 a month for ChatGPT, not 200, 20. Just FYI.
I think that's the plus plan, I believe. The Pro is 200, I think, if I'm
Yeah,
not mistaken.
200. Yeah. Hey, can I show you one more thing? I know there's still people on the line, and I know you're wrapping
Go
up.
for
Can I?
it. A lot of people still seem to be there. Show one more
Okay,
thing.
I'm going
But
to
if
show you
people
something.
need to
This
drop, we understand. So,
it's made. I'll tell you something, Badri. Seriously, this is insane. So Perplexity. If you've not used Perplexity, have you used Perplexity? Do you know what Perplexity is?
I've heard of it, but I've not used it. No.
OMG. So you have to check out Perplexity. It has deep research. This is extraordinary. And actually, ChatGPT has this as well, but Perplexity started with it. Perplexity is an incredible research tool. It takes a while. So you check the deep research, and you can see this on my screen, right? Check deep research, and you might say something like, find me all the notice. Let's see. Let's see. Okay. Distress. I mean, this is an overly simple prompt. You want to be really deep at detail. For all the distressed real estate assets in the town of Visalia, I'm pulling this out my ear, as measured by bank NODs, notice of defaults, and utility shutoffs, right? So if you see a lot of shutoffs at a building, you might think they may be having trouble. And I'm making this up, right? Cross-reference these, but also give me separate lists. So now it's going to go, and it takes a few minutes. So I can click this button, notify me. Okay, and it's going to give me a notification when it's done. But you can try the most incredible research using deep research. It is mind-blowing, the details that you get. I did this with you could run a competitor advantage. So here's what you could do: a competitive analysis, Badri, of your competitors, and then say, compile a list for me of all of their clients. Ooh, wouldn't that be nice? Not that you would do such a thing, but you certainly could, and it will give you a list.
That's
It's
interesting.
unbelievable. Yeah, and look at
Well,
it. It's
hopefully
thinking
there
through
is
the,
no competition in attending this webinar, but
somebody's doing that to you right now. They're just running this search. Perplexity.ai deep research will help you in a way. Just go ask it what kind of, if you can't think what to ask, say, I'm in the real estate business. I'm trying to find deals. I'm trying to find investors. I'm in the city
interesting.
of such and such. What can I ask you that you could answer that would be really helpful for me? Ask it what to ask
That's
it.
crazy. That's
And it
crazy.
will give you answers, and then run those searches and see what happens. It is like they describe it as having a bank of REIT analysts working for you, like
Wow.
public REIT analysts. That's what this tool is like. What do you want to do? It'll get the answers for you. It's still working this out here on Visalia. But anyway,
Wow. Wow.
I
Amazing.
found
Mind-boggling. I
data.
think on that note, we probably should
All
wrap
right,
it up.
sorry.
Thank you so much for coming.
All right.
And we will do this again. Maybe we'll go into more details on the AI. There were some other topics we said we would talk about legal ways to raise capital, the co-GP model. We didn't quite get to it, but lots of interesting topics. Some of you, thank you for staying back so a little beyond the hour. And look forward to having you in, and that includes you, Adam, in the future Avestor webinar. So.
Thanks for having me, Badri. It's always a pleasure.
Thank you. Thank you, guys.